Hey, happy Friday. Hope you're having a great week. Well, it's been a really tough few weeks in the mortgage interest rate market, mortgage backed securities. We've been moving higher. And today was the worst day we've had in the last 3 weeks. We lost, depending on which mortgage backed security coupon you track, we've lost between 60 to 90 basis points in price just today. And so, for context, 60 to 90 basis points, that's close to a 1/4% higher for mortgage rates just in one day. What's driving this as it relates to the Iran conflict? Well, it's the prospect of inflation. So higher energy prices filter in through the rest of the economy. So you can imagine how gas and oil is used to drive every element of the economy, whether it's shipping, transportation, energy production, and so on and so forth. And so that has a big effect on inflation for the economy as a whole. And so that's what the bond markets are suffering from right now, is that prospect of an increase in inflation that lasts for an extended period of time. So what we're seeing now is markets looking forward 6 months, 12 months. And if this doesn't subside, then we're looking at a situation where the Fed could possibly not only not cut rates this year, but potentially have to raise rates to combat increased inflation. So all of these unknowns are wreaking havoc on the mortgage-backed securities market right now. Now it's just impossible to know how this situation is going to play out. There's so many things at play as it relates to this Iran conflict. And so it's going to be something that's fluid and changing by the day as we get more information. But that's the way markets are reacting to things right now. And we'll keep you posted as we move forward. Fingers crossed that these the pressures on inflation start to alleviate and we can maybe see rates come back down a little bit. But as it stands now, rates are at their highest point since August of last year. We're up more than 5/8% since this conflict started. Hope you have a great weekend.